You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 2nd day of February 2026. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. Now that one's reserved for members only and those taking their 1-week free trial. If you've not yet taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. It'll take you about 3 minutes. We'll get your indicators up and indicating today. Your trial will officially start tomorrow morning and will run all the way through next Monday. The weekends do not count against you. There's no credit card required. And not only do you gain access to the live training room, but we actually treat you like you were already a member, a passport holder, for 5 consecutive trading days with access to everything. Not just the live training room, but also the logic alerts, the concierge trade alerts, the weekly trading zones, everything. The reason is we want you to be able to make a well-informed, intelligent decision at the end of your trial as to whether or not trading is right for you. So again, stick around. Michael will join us at the top of the hour and he'll walk you through the couple little steps you need to take your free trial. And again, there's no credit card required. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. It's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down to where it says noon broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. The benefit there is you have access to the question box right away so that you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy. You can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,900 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. And you can see exactly how we've evolved over the years, day by day by day. Obviously, you're not going to watch them all, nor do you need to. But again, it is a great resource to have at your fingertips. And again, it allows you to see how we've evolved from where we began to where we are now. youtube.com/CFRN. On the left side of the screen is our schedule for each afternoon broadcast. Now again, Michael will join us at the top of the hour for a recap of what happened this morning in the live training room and then some live trading. But we'll start where we always do with the afternoon broadcast, and that is our daily devotional. And we're beginning a new topic this week: 5 fear-fighting truths. Today's scripture is Isaiah 41, verse 10, and I'm going to share it from the NIV translation. So do not fear, for I am with you. Do not be dismayed, for I am your God. I will strengthen you and help you. I will uphold you with my righteous right hand. Again, Isaiah 41, verse 10. So as we begin this new topic, 5 fear-fighting truths, I want you to understand that God will help you with your fear. Do you have faith and yet still experience fear? For a long time, I didn't understand why God tells us, do not be afraid, and then gives us bodies that are physically wired to experience fear. Our nervous system triggers our flight or fight response. It's automatic and always involves fear. This protects us and helps us survive. If a bear comes charging through the door, we need to feel fear. So if we're wonderfully made, like the psalmist says, then how do we reconcile what God seems to tell us to do with how He's created us to feel? As someone who has wrestled with fear for most of my life, like most people, I've asked that question often. And as I look closer at what God says, I finally found my answer. Verses that say, do not be afraid, are almost always spoken to or for someone who is already afraid. The Israelite armies about to go into battle, they were afraid. Mary being startled by an unexpected angel. She was scared. The Apostle Paul facing a serious storm. More fear. In other words, when God says, "Do not be afraid," it is most often offered as a reassurance, not issued as a command. He's not saying don't ever feel fear. He's saying, here's why you don't have to stay afraid. In Isaiah 41:10, we read, "Do not fear, for I am with you." In Isaiah 41:13, "Do not fear, I will help you." Isaiah 43:1, "Do not fear, I have called you by your name. You are mine." It's the kind of language a loving parent would use to comfort a child who's afraid of the dark. A compassionate mom or dad knows their little one is going to be okay, but they give words that soothe hearts and calm minds anyway. And most beautiful of all, their love defeats the fear. If we wait to do God's will until we don't ever feel fear, then we'll stay stuck. He's okay with our trembling hands, knocking knees, and pounding hearts. After all, He designed the bodies that experience them, and He spent 33 years in one. When we struggle with anxiety or fear, the enemy can try to use it as an opportunity to make us feel guilt or shame. That's when we can pause and ask God for help, knowing He understands and never condemns us. God will come alongside us in our uncertain moments and give us the reassurance we need. Then He'll lead us out of fear and into holy courage. Let's pray. Heavenly Father, thank You for always being there. Whenever fear strikes, we know that You are just a prayer away. And also, Lord, we pray today for all those across our country who are possibly still without electricity, without heat, undergoing the incredible ravages of this storm. So, Lord, when fear rises, remind us that You are with us. Strengthen us, uphold us, help us stand firm in Your presence. Let Your peace replace our anxiety, and Your power carry us through every challenge we face. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Monday. It's definitely a Monday. Let me give you the numbers from around the world, and we'll go to the news and then go to the charts, and Michael will join us. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is up 492 points. That's 1%. NASDAQ up 177. S&P 500 up 45. And the Russell 2000, or man in the street, up 27 points, well over 1%. In the commodity basket, crude oil down $3.38, trading 61.83 last. That's a drop of almost 5.25%. Gold down $47.40, trading 46.9770 last. That's a drop of 1%. Silver up 33 cents, trading 78, make that 79.02 last. In the Asian markets at the close, the Nikkei dropped 667 points, 1.25%. Shanghai fell 102 points, 2.5%. The Hang Seng dropped 611 points, 2.25%. And in the European markets at the close, FTSE up 118. That's well over 1%. The DAX up 246, 1%. And the CAC up 54. So we had a red day in Asia. It was a green day for the UK. And at the moment, it's a big green Radio Monday here in the US of A. Let's take a look at the news. Gaza's border crossing with Egypt formally reopens today to limited crossings after almost 2 years of near complete closure. The move allows some Palestinians who fled the Israel-Hamas war to begin returning home. The reopening of Rafah is part of the second phase of the Israel-Hamas ceasefire, which began in October and was threatened by ceasefire violations. Israel, which controls the Gaza side of the border, says it will allow 50 patients and up to 2 relatives each to leave daily for medical evacuation. Roughly 50 Palestinians will be allowed to re-enter daily, with Israel and Egypt vetting people upon exit and entry. European Union Border Patrol agents will assist with supervision. Israel says it will ramp up travel as the system succeeds. Tens of thousands of Palestinians fled Gaza amid the war. Israel puts the figure at 42,000. Palestinians put the figure at over 100,000. Palestinian officials say roughly 20,000 Palestinians seek to exit the enclave for the purpose of medical care. The thoughts and prayers are certainly with those folks. The 68th Annual Grammy Awards were held last night with Bad Bunny, whoever that is, taking home Album of the Year for Debí Tirar Más Fotos, which translated is I should have taken more photos. The win makes the 31-year-old Puerto Rican rapper and singer, whose real name is Benito Antonio Martinez Ocasio, the first Latin artist to win the event's top prize. Kendrick Lamar won 5 awards, surpassing Jay-Z to become the most awarded rapper in Grammy history. His wins include Best Rap Album for GNX and Record of the Year, alongside SZA for Luther. Other winners included Lady Gaga, who won Best Pope vocal album Mayhem. Billie Eilish won Song of the Year, Wildflower, and Olivia Dean won the Best New Artist. The awards were hosted by former Daily Show comedian Trevor Noah for the 6th year in a row. So much for the red carpet. I don't think anyone even cares anymore. Hey, but maybe I'm wrong. The nation's attention this morning, though, was not on the red carpet. It was on Punxsutawney Phil. Today is Groundhog Day, and I don't mean the movie. I mean the actual Groundhog Day. Punxsutawney Phil determines whether 2026 will bring an early spring or a longer winter. The prescient land beaver will pick one of 2 scrolls just past 7 a.m. Eastern, each containing separate wintry prophecies. I actually saw it happen this morning. This article was written prior to it, and word is from Phil, 6 more weeks of winter. No early spring. Turning to Wall Street. U.S. stocks found a foothold today after a dramatic sell-off in gold and silver unnerved investors, shaking off AI trade worries as earnings flooded in and Federal Reserve uncertainty swirled. Wall Street is heading into a new month digesting fresh uncertainty around NVIDIA and the broader artificial intelligence trade. CEO Jensen Huang played down the chipmaker's pledge to invest $100 billion in OpenAI after the Wall Street Journal reported the plan was on ice and shares dipped. Big tech has led market moves throughout the start of 2026, with earnings leading companies in oppositional directions. Quarterly reports from Amazon, Alphabet, and Advanced Micro Devices lie ahead on the docket this week in a wave of corporate earnings, with Disney and Palantir reporting today. Pressure is easing on stocks amid a roller coaster ride for precious metals that has unwound much of 2026's most rip-roaring rally. Gold and silver swung back the gains early on Monday after rising, then tumbling in Asian hours. That action followed a Friday wipeout that saw silver post its biggest single one-day drop on record. Snowflake, which trades under the symbol SNOW, S-N-O-W, said today it has entered a $200 million partnership with OpenAI to integrate advanced artificial intelligence models directly into its cloud data platform, as enterprises increasingly turn to AI to extract insights from vast troves of data. Cloud data platforms, where companies store much of their most valuable and sensitive information, are emerging as a key battleground for generative AI businesses. By embedding AI models directly into these platforms, vendors aim to let enterprises analyze data, search internal documents, and automate tasks more easily, while preserving strict data security and governance control. And that puts Snowflake up about $1.50 a share on the session. Under the deal, Snowflake and the ChatGPT maker will develop AI agents capable of handling complex workflows, allowing users to ask questions in natural language and receive answers drawn from company data without writing code. The partnership reflects a broader shift among enterprises, which are moving from experimenting with basic AI chatbots to deploying integrated agents that can work directly with proprietary data, increasingly prioritizing systems that combine automation with tighter oversight. Snowflake said the partnership expands earlier collaboration between the two companies by making OpenAI's models available within Snowflake across all three major cloud providers. Originally, it was only available through Microsoft's Azure. And from Bloomberg, President Trump is set to launch a strategic critical mineral stockpile with $12 billion in seed money, a bid to insulate manufacturers from supply shocks as the U.S. works to slash its reliance on Chinese rare earths and other metals. The venture, dubbed Project Vault, is set to marry $1.6 billion in private capital with a $10 billion loan from the U.S. Export-Import Bank to procure and store the minerals for automakers, tech firms, and other manufacturers. U.S. rare earth stocks jumped in pre-market trading upon news of the administration's plan, including USA Rare Earths Inc., Critical Metals Corp., United States Antimony Corp., and Nicor Development Limited. Details of the initiative, which would represent a first-of-its-kind stockpile for the U.S. private sector, were described by senior administration officials who asked not to be identified, discussing a plan that has yet to be announced. And turning to Capitol Hill, or the government, federal authorities have arrested 2 more suspects in the Minnesota church invasion, according to Attorney General Pam Bondi today. Bondi wrote on X, "If you riot in a place of worship, we will find you." We have made 2 more arrests in connection with the coordinated attack on City's Church in St. Paul, Minnesota. Ian Davis Austin and Jerome Richardson. Both Austin and Richardson appear in the indictment that a federal grand jury handed down last Thursday. The group of anti-ICE agitators interrupted a Sunday service last month at City's Church, a non-denominational Christian church in St. Paul. According to the indictment, Austin and Richardson met with Nakima Levy Armstrong and Chantrell Louisa Allen before invading the church. Former CNN host and independent journalist Don Lemon, or Lemon, told Richardson, "Don't give anything away," while speaking to his online audience as he live streamed the invasion. So I guess the real question is, what happens to Don Lemon? President Trump is addressing the problem with drug abuse in America. The Department of Health and Human Services announced new resources to make drug abuse treatment more affordable and accessible for families at risk of entering the foster care system. Health and Human Services Administration for Children and Families will announce that 3 Food and Drug Administration approved medications for opioid use disorder meet eligibility criteria for Title IV-E, a federal funding program supporting families involved with the child welfare system. The agency says expanding access to the medications will help parents get treatment for opioid abuse so families can stay together, limiting foster care placements and the trauma children experience when they're separated from their families. When we deny parents to affordable, effective treatment for opioid addiction, we tear families apart, according to Secretary Robert F. Kennedy Jr., using Title IV funding to provide life-saving medications to keep families together moves our system toward recovery and prevention. States and tribes can now receive a 50% federal fund match to provide buprenorphine, methadone, and naltrexone to parents whose children are at imminent risk of entering foster care but can safely remain with their families due to access to the medications. Parental substance abuse disorder is one of the leading causes of foster care placement. More than 400,000 children are currently in foster care, many not because of abuse, but because a parent is struggling with addiction. What a great thing. Glad to see somebody finally take notice of something we've talked a lot about over the last few years and the hundreds of thousands of lives that have been lost, primarily to the deadly fentanyl that used to flow freely into our country under the prior administration, but not so much anymore. Logic 247 is our 24/7, around-the-clock Emini alert service. Not just E-minis, but also crude, gold, and silver. Over the last 392 weeks, we've issued over 21,400 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and the simple process we teach all of our passport holders. Valerie did the recap this morning at 6:30 a.m. Eastern, so some things may have changed since then. Since the markets opened last night at 6 p.m. Eastern, we issued a total of 11 alerts. When Valerie did the recap, we were still waiting on the outcome of 6. That gave us 5 actionable alerts. And so far this week, nothing stopped out, but it's only Monday. Last week, we ended up with 12% stopped out. Now, the purpose of the logic alerts is to help you learn how to read the chart. To look at a chart that has no words, sentences, paragraphs, or punctuation, and understanding how price flows and understanding where you're most likely to encounter potential resistance, potential support, which helps you identify the windows of opportunity that will bring you your best high probability, low risk trade opportunities. Every logic alert has an entry price, long or short, followed by an initial target designed to help you get your goal for the day. After that, there's typically additional targets and then a final trade to target. If you never actually trade a logic alert, use them for the purpose intended, which is to learn how to read the chart. Because once you learn how to read the chart, you won't need the alerts, because you'll see everything we see. Now, the logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, 392 weeks is a long time, a little over 7 years. But quite a few years before we introduced Logic 247, we had our original alert service, the concierge trade alerts. And they're different. They're different in a lot of different ways. But for the purpose of this discussion, I'll simply say they typically come out 5 minutes ahead of the Globex open, 5:55 p.m. Eastern. But because we knew the markets would be volatile last night and the potential for gaps was substantial, the markets opened at 6 instead of, and I put a note in the discussion group so everyone would know, instead of putting them out at 5:55 p.m. Eastern, I waited till 7:13. I felt at that point things had kind of settled down enough. And so, an hour and 13 minutes after the markets open, all of our traders had all of these targets. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as you see these drawn out on the charts, the individual charts, just keep in mind it was 7:13. Now on a typical day, it'll be 5:55 p.m. Eastern. That's under normal market conditions. Right now, we don't exactly have normal market conditions, and we're also in earnings season. With futures, especially the indices, we rarely see gaps because futures trade around the clock. But Sunday night, we do see gaps. And in earnings seasons, we quite often see gaps. So I'll update you each day via the discussion group in Telegram as to what time I anticipate putting out the CTAs. So with that said, we'll go to where we always start, the daily chart of the S&P 500 E-mini futures. Okay. So we talked about this as we were getting ready to put in a new all-time historic high. We talked probably every day last week about the fact that once we put in a new all-time historic high, this is typically what happens. So honestly, the sell-off we got this time from the new all-time historic high wasn't so bad. I mean, this morning when the markets opened, we dropped all the way down to the 24% fib extension, pretty much to the tick. But we've bounced back now, and we're just off the high of the day. So when the markets opened last night, we had a drop. We had a red candle. And then as price moved back to the opening price, the red candle went away and became a wick. And now we got a green candle. The 62% fib extension just overhead is the next potential resistance. We're off the high of the day, so of course the high of the day so far 70.14, and then 70.20, and then the high of January 29th 70.29.50, then the all-time historic intraday high from January 28th 70.43. So on that day we got a new all-time intraday high and a new all-time historic closing high. That closing high was 70.16 3/4. So we got a leg, a retracement, a deep retracement, but the pullback held. Now price always reverts to the mean. In our case, the mean is green. Call it the BBC, just stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Higher, lower, higher, lower, higher. Now, when price pulls back, sometimes we spike the BBC, as we did here. But as long as the candle is physically touching the green line, like you see right here and right here, then the pullback held. But remember, price will always revert to the mean. It doesn't matter what methodology you use, what strategy you use. That's just how markets work. That's no secret. You can Google it. Price always reverts to the mean. Now, if we take out today's high, 62 again is 70.20, and then the next potential resistance, 70.29. And if we take out 70.29, then there's nothing but clear space all the way up to that all-time historic high put in January 28th. So this is the Monday candle, Friday, Thursday, Wednesday. It was actually Fed day. And then we had a huger candle Thursday after Fed day, which was kind of unusual. And today is one of the biggest candles we've had in some time. It's even bigger than last Thursday. Now, how we close will be really important. Okay. Remember, this is the all-time historic closing high right here. $70.16.75. Right? Yeah. So that's just below this 20% fib extension. So if we close at or near the high of the session, then that tells us that the institutional traders who actually move price are confident, and we should anticipate perhaps when the Asian markets open tonight and the European markets open at 3 a.m. Eastern, we'll see price continue higher. On the other hand, if this was simply a buy the dip and dump it before the close move, well, things could get a little bit ugly. So there's only one way to find out. That's to wait and see. Hang on one second. All right. All alerts are created on the 30-minute chart. The Logic 247 alerts and the Concierge Trade alerts. The vertical line separates today, Monday. This is last Friday. This is last Thursday. The horizontal lines are the weekly trading zones. The weekly trading zones are published every Monday morning at 6:15 a.m. Eastern for a little over 16 years now. When price drops to a weekly trading zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. Now, these are last week zones. Because the zones aren't published until Monday morning at 6:15 a.m. Eastern, all alerts that go out Sunday night are based on last week's zones, the zones that came out last Monday morning. Now, any alerts that go out today, tonight, will be based on this week's zones. And on tomorrow's broadcast, you'll see this week's zones on the chart. But you're seeing last week's zones because that's what everything was based on last night. Okay. Now, we've had a strong move up, but the black step line is about to cross from the, see on the way up, the black step line is on the left side of blue and climbing. But it looks like it's about to cross over to the right side. When that happens, price will typically retrace back to the BBC. And we're just on the cusp of that happening. This was the gap lower open last night. We gapped right down to a weekly zone and continued down and found support at this zone, 69.20.21. That bounced us up to the zone at 55.56. Resistance always sends the market looking for support. So if you come down here and if you scroll way left on your chart, you'll see the area that brought buyers in. Red and falling, turned to blue and climbing. There's the London Open right there. So we get above the BBC. We hit the underside of the short target. Now we already hit the short target on the way down to the zone where we found support. One of three things happens when price encounters a zone. 70% of the times consolidation, 20% of the times rejection, 10% of the time the slice. So when price trades through a CTA target on the retracement, like if it's a short CTA, on the retracement, the underside will often become good resistance, as it was here for a few hours until we finally broke free and got a leg and a retracement and then a big leg, and that puts us right here. Price looking to cross over. In most cases, we would then get a retracement back to the BBC. However, you could get potential support here at last week's zone, top side of the long target, the BBC. So there's a number of areas for the market to find support. If it trades through this area here, then we're probably headed back to this area right here. 69.27/28. And of course, members have this week's zones. As I say, they will be on my charts tomorrow. That's how it is every Monday, because both the logic and the CTAs that went out last night were based on last week's zones. But everything else that goes out this week will be based on this week's zones. The Dow. This was the gap lower open last night. Price ran up to the zone at 490.30 and found good resistance. Resistance will always send the market looking for support. If you scroll way left on your Dow chart, you'll see it. Red and falling turned to blue and climbing. Here's that London Open. So we get a leg. Now this is an unusual move here, okay? The step line crossed. We did get a retracement to the BBC, found support at the zone, and then ran through the target, hit the zone. We pulled back to the target. Now we're up above this zone from last week. And as you can see, the step line, the black step line is leaning to the right, getting ready to cross blue and climbing. And in most cases, that would bring us right here. If it were to happen right here, right now, you got support times 2 here. Remember, when you trade through a CTA long target and price on the retracement, the top side of that long target often becomes support. A pullback to the VBC holds more often than not. So there's two reasons for this area to be potential support. We'll have to wait and see what happens. On the Russell, this was the gap lower open on it last night. Bounced up to the zone at 26.29/30. That sent us way down. Scroll left on your chart and see what you find. Right here, the step line crossed red and falling. And there's the retracement to the BBC. Red and falling turned to blue and climbing. When you have this much blue and climbing chasing price, that's when you should consider this, because we know the pullback holds more often than it doesn't. There's no doubt about that. But eventually it's going to trade through. And when you got this much blue and climbing chasing price, that's the most likely time for it to trade through, or for the pullback to not hold. So we got through we hit the long target, came right back to, now I said one of three things happens, and 10% of the times a slice. See how this was a green candle all the way up to the long target. So we sliced through the zone right there. When the move ran out of steam, we retraced back to the zone we sliced through, and then continued in the direction of the slice. That's what happens most times, not every time, but certainly more often than not. Now, price still trying to go higher. As you can see, we got a high. Remember, this is today. This is Friday. Back over here is Thursday. Okay. So there's potential resistance up there. Looks like that's where price is trying to head. But look at the step line. This sideways consolidation has moved the step line. See how they were running parallel on the way up? And now that's changed. So look for a retracement. Doesn't mean the rally's over, but that's how markets work. Leg retracement, leg retracement, leg retracement. Over and over again and again. It's just how markets work. On the NQ, gap lower open. Then we ran up to the zone at 25,646/47. Resistance at the market looking for support. Scroll left on your chart. Find that area. Step line crosses. Price comes back to the BBC. We consolidate. Remember now, we're hitting the underside of the short target. We hit the short target over here. Literally went from zone to zone. That one candle is pretty substantial. It opened at 527. So that's 127 points at $20 a point. You can do the math in that one candle. But here comes London. Red and falling turns to blue and climbing. We consolidate at the underside of the short target, just like the other indices. And then we make this rip-roaring rally, and we're now up to these highs from Friday, okay? But we still have these highs here and much higher over here. Price looks like it still wants to get up to that zone, but with the step line trying to cross blue and climbing, just be careful on the long side. If the step line crosses, Look for that retracement. Here, here, here. Okay, crude oil. Huge gap lower open last night. So 8 o'clock, remember it was 7:13 when the CTAs got published last night, as opposed to 5:55 like normal. So the 7 o'clock candles over here. Here's where we got our drop. It took us right to the short target at 63. We consolidated, traded all the way down to the zone at 6175/6180. And we've just been kind of going from zone to zone to zone to zone to zone to zone. We are below the BBC. We got red and falling overhead. And so the chance for lower prices is pretty substantial. 6160 potential support. 6140 potential support. If you're trading crude, you might want to jot those numbers down. Potential support at 6160. And again at 6140. And of course, if you remember, you already have this week's weekly zones. But the previous week's zones, as you can see, now these zones were published a week ago, last Monday morning at 6:15 a.m. Eastern. But here we are a week later and they're still doing their job. Price drops and we get support. It rallies up, we get resistance. It drops, we get support. That's how price flows across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Gold, here's the massive sell-off Friday. Had a gap lower open last night. And then at 8 o'clock, we hit the short target, spiked it, consolidated at last week's lowest weekly zone, 4730/31. And then came London. Red turned to blue. Got back up to the zone, consolidated. Had a leg, a retracement, a leg. But blue and climbing turned to red and falling. And so now that's pushed us back down to the short target, where we're consolidating sideways. There's the massive sell-off Friday in silver. Biggest one-day drop in history. So here's where we opened last night. When red and falling gets directly below price, it can often become support. Gave us a bounce. And then we traveled all the way down to the short target. Scroll left. Buyers came in, turned red to blue. Took us up to last week's zone at 8242/43. The step line crossed. We dropped again to the short target. And here we are. Got the BBC right overhead. That's potential resistance. If we overcome the BBC, then you got potential resistance here at the zone. And right here, where blue turned to red at about 8338/39. That's if price can get through the BBC. Hang on. And we're back. Okay, let's take one last look at the ES Daily. As you can see, we did run up and tag that 62% fib extension. Price is still trying to get through it. If we get through the 62, then the next resistance is at 70.29.5. So the 62 is 70.20 and change. This high right here is 9 points higher than the all-time historic high intraday is up at 70.43. Okay, Michael should be here any second. To become a member, email Valerie, support@cfrn.net. She'll email you all the information you need to become an official passport holder. 2 hours of live training every day, private one-on-one mentoring, the strategy you learn, the indicators you use as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. You get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones. Every Thursday night, you're able to attend the members only workshop. And you get the golden keys that open all the private channels in Telegram. Everything a trader needs, all under one roof. One low price. Okay, Michael's on his way. Stand by.
Okay,
There you are.
I'm sorry.
Oh, no problem. Everything okay?
Yeah, I got caught up in something else.
Yeah, no problem.
Didn't realize the time.
No problem.
Okay, so let me grab everything, bring it over here. There we go.
Okay, looks good.
All right, let me see who's here. Is Bobby out here? Robert? Myself. Okay, I'm going to make that meeting. All right, here we go. Good afternoon, everyone. It is Monday, the 2nd day of February, 2026. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Just click on that purple button. It's going to bring you to this registration page, where all that we ask for is your name, your email, and your phone number. Down at the bottom gives you TradingView login ID. All right, once we get that, we'll be able to enable the indicators. You'll have them indicating on your desktop. Hit the register button, and we'll know you took the trial. And you'll be sent everything you need to get into the room with us in the morning and start your training. 5 consecutive days of training. Now, Michael R. had sent me something to help me fix this, but I didn't fix it because I got caught up in something else. But this is a spreadsheet. This spreadsheet goes back to January 2nd of 2013. So it is well over 10 years of data. If you're going to read the spreadsheet, you'll read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 2nd day of February 2026. And today we're up 124 on the NQ, 4 on the Russell, 45 on the YM, and -4 on the ES. It was back and forth at the halfway point today. We're only up $300. So the second half of the morning session was actually better than the first. Overall, we're up $815 with one contract this morning. And today it took 6 minutes and 6 trades to get to $1,100. Now, I don't believe I stopped out at the beginning. It just took me 6 trades. We took a total of 48 trades, and we had 9 stop outs this morning. It seems like a lot of stop outs, but 81% of our trades were break even or better this morning. So on a month, we're at 815. Down here, this stuff down to here, I think is correct. Let me just look at what Michael sent me. There's some column Q 5441, Q 5441, Q 5441. It's this one. 5441 is, well, that's 5442. I think it meant 5442 is a sum of cell S5431. Sum of cell S5431. Okay. That's what this is supposed to be. Okay, I'll fix that later. Anyway, on the year now, we're averaging $1,640 per contract per day on the year. That number is correct. These numbers are not correct right now, so I won't get into what the 2420 says, but it's pretty close to that. That'll have gone down just a little bit. I will fix that up here pretty soon. All right, and that was all that. So let's get into the trades that we actually did take. The majority of the trades were on the NQ today. We took a bunch on the Russell. Let's just start out with the Russell, and we'll work our way across. Now, let me move stuff around here so I can see my DOMs in case we do have any trades coming up here, which we do not right now. But let's look at the Russell. Okay, and we'll hit Control and back on that since I'm starting a couple of minutes late anyway. All the way back to the beginning. You can see I made a mistake in there at one point. Here we are, all the way back to the beginning. Now, on the Russell right here, our very first trade on the Russell, we picked up 3 ticks. And the next trade we picked up 11. That got us to plus 11, and then the wheels fell off. Made a mistake on that one, and I should have my stop at break even, I think. And that put us at -4. Then the one after that was a valid stop out, put us at -19. Got 2 there to -17, then 5 there to -12. Then we stopped out again to -27. That was the low of the day right there, -27. Then went from -27 to -12. So we had a 15 tick trade there. And then we went from -12 to 0. So we had a 12 tick trade there. And then we went to 3 on that one. And there was one more. We got one more tick. We went to 4. And that was it on the Russell. And during the break, it looks like there was one trade right here during the break. And one trade right there during the break. And that was it. And that was it on the Russell. All right. On the YM today, we were positive the whole day on the YM. And we ended with 4 on the Russell, which was not the high of the day, but it was not too far off the high of the day. And we'll go back here to the beginning on this guy. Yeah. Okay. Let me just click on this. There we go. So on the YM, our first trade on the YM, we picked up 2 ticks. This was just like that. So we picked up 2 on the first one, then 9 on the second one to get us to plus 11. Then 1 to get us to 12, and then 16 there. Now that one, I have this on it because, I don't know. I think it's because I entered over here somewhere. But we picked up, went from 12 to 28 on that one. Then we stopped out, went down to 13. Then went from 13 to 23, 23 to 24, 24 to 34, then 34 to 39, then 39 to 45, and 45 to 46, and 46 to 47. And then we stopped out and went down to 32, and 33, and 38. And there's one more somewhere, went from 38 up to 45. And that is where we ended it with the YM. Okay, and the YM does not have a trade right now. The last YM trade looks like it was right back here a minute ago. We're not in anything right now. All right, The ES. No, the ES. We ended negative on the ES. The ES was the other one we ended negative on. Not much of a day here on the ES. We started out here with a +4. Then we had one more with a total +5 right there. Then I stopped out in here somewhere. There should be a red one in there somewhere. We went from +5 to -5, and then we got one more tick right there to get us to -4. And that was it on the ES. It's a big move up right here on the ES. And up close on this bar would be a long on the ES. It's got a low here of 11.25, so it'd be 13.25. Okay, so an up close on the current bar would be a long on the ES. Now the NQ. And the NQ is where we ended up getting the majority of our money today. Go all the way back to the beginning on this. Okay, that ES still hasn't triggered. Here we go. All right. Let's double click on this. All right, the NQ. Now the NQ was kind of wild right at the beginning. Our first trade on the NQ was right here. We picked up one tick on that. One tick on that. Then another tick. Then two more. That got us to 4. I don't know what happened here, but we went from 1 to 2 to 4 to 7 to 59 to 63. So it looks like there's some things missing in here. So we went from 1 to 2 to 4 to 7 to this, I think, was where we got the 45 ticks right here. We went up to 59. I went from 7 to 59, yeah, right there. And, or actually 47, went from 2 to 47. That's what it is. We went from 1 to 2 to 47. I think this is where we went to 47. And then went to 59 and then to 63. And then we stopped out. We went down to 37. And then from 37, we went to 43, then 47, then 51, and then we stopped out again down to 26. And then from there, we went from 26 to 30, and 30 to 34, 34 to 40, 40 to 56. There's a lot of trades there. It's all through here. 40 to 56, 56 to 72, 72 to 84, 84 to 92, 92 to 96, 96 to 100. And our last trade of the day was a stop out. From 96 to 100, 100 to 145. So I think that 145 was right here. We got 45 ticks there. 145 to 149, or maybe it was this one. 145 to 149, and then we stopped out our last trade of the morning session. It put us down to 124, and that was it on the NQ. All right. During the break, it looks like not a whole lot there during the break. One trade, maybe during the break. Okay, it brings us current. The ES never did trigger that ES trade we're looking for over here. So I can cancel that. All right, and that brings us current. So right now it is 1:14. We haven't taken any trades in this session so far. We finished up the morning session again with $815 a contract. All right, 124 on the NQ, 4 on the Russell, 45 on the YM, -4 on the S, 815 per contract. So we're averaging on the year $1,604 per contract per day so far. Right, that was $1,279 until today. They brought it down a little bit, but we'll get it back up by the end of the month. Okay, so here, let's put 30 on there, 22 on there, and we'll go over here, and we now have it's 1:15, so we'll say we have 15 minutes. That's pretty good considering I started a few minutes late today. Copy that to there. We'll get in here and trade what we can. All right. All right. Let me just see if anybody asked any questions. Nobody usually does in this session. No questions. All right. right, so we're just going to trade for a few minutes here and get what we can out of this. All right. All right. So this is not going to be a trade here. It's going to give us an up close followed by a down close. All right. That's not going to be a trade. Actually, we need to flip the YBR is what we need to do. We need to flip the YBR. We have an up close followed by two down closes followed by an up close is what we need. Well, we're going to flip the YBR. Going to the red like the other two are over here. Okay, so overall on the day, where are we now? We are near the high of the day here on the yes. I was expecting we'd be near the high of the day by the end of the day. I'm expecting we'll be here by the end of the week, probably. I know the timeline for that put us out to the 12th of February, but I think it could be by the end of this week. As soon as the end of this week, possibly. Okay. It's not a trade setup or anything yet for that. All right, and Robert is still not in here. Wow, this is slow. Hmm. Yeah. Oh, I just talked through that whole thing. Jeff, did you hear any of that? I thought my mic was on that whole time. I'm guessing my mic was not on that whole time. Okay. Let me say it all over again. Right, it's because the midband was not flat on the bar before. Right, I just went through this whole thing. So this one right here, you see how the midband is flat on the bar before when it came out of the oversold? That's the trade. Okay, right here, went full cycle, came back down, the midband was flat on the bar before, that would have been a trade right there. I wasn't trading at that point, or I would have taken that and stopped out. This right here was not a trade because this didn't go full cycle. So then you finally got the full cycle here, but the bar before the midband was not flat. Okay, it's got to be flat on the bar before. Like this. And like this right here. See, the bar before that was flat right there. Now, arguably, you could have not taken that trade because it didn't actually hit the midband. You could have skipped that trade because it didn't actually hit the midband right there. That's probably the thing you should have done because it didn't put in a higher swing either. Okay. I just explained that thing. I was waiting for you to reply, so I explained it like 3 different ways. I didn't realize my mic was. Well, now you know. So on all of them here, we're waiting for a pullback, right? You see how this is flat right here? So now you could take a bounce off of that. This one's not flat. That one's not flat. That one's not flat. They will flatten out once the price pulls back up. They'll flatten out and start going sideways as it starts to pull back. Right? Every one of these on an up close, every one of these on an up close is going to flatten that midband. I think this one already did. Almost there. Almost there, there, and there. See how they're all flat now? They're all flattened out. That's what you're waiting for. They just need to hit it and bounce off it. Come out of the overbought. So a down close right now on the NQ would be a trade. Okay. Down close here on the NQ would be a trade. The ES is almost there, but the NQ is the closest. A down close on the NQ would be a trade. This one came out of the overbought, so it shifted to midband on you, so that's not going to be a trade on the Russell. The ES is pretty darn close. The NQ is pretty close too. The ES could just hit it and close down. This is going to change it right here on the YM. So the YM and the Russell get to start over. So we need a down close here on the NQ. Still need a down close here on the NQ. Right, it'll still work. Even now, it'll still work on the down close on the NQ. Okay. The ES now too. The ES, the down close will work there too. Okay, the others have already dropped, so these two here have already dropped and come out of the overbought, so they have to reset. But down close here and a down close here is all we need. We also need down closes here too. This needs to get into the oversold. This one needs 2 up closes followed by a down close. This one needs a down close, 2 up closes, and a down close. This one needs 1 down close, and this one needs 1 down close. All right, now the NQ has gotten too far away. So I'm going to cancel that because the down close is not on the midband. The ES is still a possible trade, but the NQ is not. Okay, and this is not a trade here on the YM because we didn't go full cycle. We've now gone full cycle on the Russell. So we could have a trade there. But the ES is the only one possible right now. Okay. All right. The ES will still be possible even on an up close. It's 120, 127 already. We're almost out of time. I hope we're going to get the CS trade and it's going to go down. We're very close to having it right now. Okay, this has got a high here of 0.25, so I have a low 0.50. Down close will fill us in here at 0.25 probably. 0.25, 0.5. Right there. There it is. All right, so I'm in here. Okay, the yes is valid short. This needs to go full cycle and then pull back. This needs to go full cycle and then pull back. This has gone full cycle, it needs to pull back. This needs to just go down. Full cycle on the yes would be nice. If we got all the way down to 4.25 right here, would be good. But you see it's got another high number right there. So either one of those would be great. Right, so the yes is starting to move. I go just a little bit further. There it is. So we're gonna break even on it. I'm gonna lock in just one tick so we don't lose any money. And it should get all the way down to the swing low here at 4.25. 2 ticks. Now we've gone full cycle on all these other ones now. Okay. Yeah, I'm out with 2. I was considering taking 4 on that, but we're out with 2. Okay, so this will be our first trade for today. I have 2 on the ES. 1 and 0. There we go. Right, and this number becomes a 38. Everything else should adjust. All right, so we have a chance for another trade here on the up close right here. Right here, Jeff, you see when this closes up, it should bring this into the overbought and flatten out the midband. Same thing with this one. Read into the overbought and flatten out the midband. So the bar after that will be able to trade. Okay, same thing with the ES right now. See how it flattened it out? Went into the overbought, flattened it out, so now you need a down close. Okay, it just keeps going higher and higher here. So you need a down close on this one. You need an up close followed by a down close on that one. Up close followed by a down close on that one. Up close followed by a down close on that one. So this is the closest one to a trade. And it's actually time to quit right now. And there it is. All right, so we're in that Russell trade. And that'll be our last trade, I think. It's got to go one more tick, I think. 2 more ticks to get the stop down to break even plus 1. Almost. Okay, you see how on the down close right here, that went up on the down close. That means the next up close is probably not going to make it into the overbought. It's going to go sideways right below the overbought probably. Okay, I know I'm running over a little bit here. Sorry, Dwayne. A down close on this one right here on the NQ would also be a short. We had this one trade on here on the
no problem. No worries.
We'll probably run out pretty quick here. This is gonna meet with bottom. All right. Now it gave a down close on that bar, but it hasn't gone five ticks into profit. There we go. Okay, so now we're going to go to +2 on that Russell trade. Okay, we're out with +2 on the Russell. The NQ actually gave a trade over here too, but I'm going to wrap it up with the Russell trade. All right, put the Russell trade in here. 2 ticks on that guy right there. All right, so we didn't have a lot of trades today, just 3 trades. We got up to $350 with 10 contracts, or $35 with 1 contract. So we didn't make it to the goal for the day in this session. We had 15 minutes of trading. It just didn't go. Now, so that puts us so far in these sessions, we're averaging $137 per session in these sessions. About 14 minutes of trading in these sessions. And today we're 3 wins and no stop outs. Friday we're 10 wins and no stop outs. That was awesome. Friday was our best day of the year. I'm pretty sure. We're at $2,500 per contract in the morning session. So Friday was definitely our best day of the year. All right. If you haven't taken a free trial, go here to mytradingiq.com, click on the purple button. There's no credit card required. Click on that. It's going to bring you to the registration page. Just fill it out. Okay. All right. And with that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking the South Mountain, America's largest city park. It is ready.
Yep. Okay, recap of the morning session.
Today it took 6 minutes and 6 trades due to $1,100 with 10 contracts on.
Good job.
Thank you very much.
All right, guys, we covered every market in granular fashion during today's broadcast. So if you missed any part of today's broadcast, simply go to youtube.com/CFRN as soon as I log off, and you'll be able to watch today's episode in its entirety. And as I already explained, to become a passport holder with access to everything, a full-fledged member, just email Valerie, support@cfrn.net. And we'll wrap it up with our good word for the day. God is for you, not against you. Psalm 56:9. This I know, God is for me. In his best-selling book, The Tipping Point, Malcolm Gladwell defines the tipping point as the moment of critical mass, the threshold, the boiling point. It's the moment when an idea, trend, or social behavior passes the point of no return and gains acceptance. In the realm of physics, a tipping point is when an object is displaced from a stable state of equilibrium into a new state. In economics, it's the point at which an emerging technology becomes the industry standard. In sociology, it's when a quorum of people adopt a behavior so that it reaches critical mass and goes viral. Spiritually speaking, the tipping point is when you believe without any reservation that God is for you. It's the revelation that God doesn't just love you, he likes you. He loves you enough to die for you, and he likes you enough to spend eternity with you. Yet, some of us remain skeptical. We project our self-contempt onto God, assuming that he must be as angry with us as we are with ourselves. Or we fall into the performance-based trap of thinking that our behavior determines God's posture toward us, whether that is for or against. Listen, the fact that God is for you was proven at Calvary's cross. Oswald Chambers wrote, "No power on earth or in hell can conquer the Spirit of God in a human spirit." He said it is an inner unconquerableness. Religion is all about what you can do for God. Christianity is all about what Christ has done for you. But it starts with this all-important kernel of truth. This I know, God is for me. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.